What's up traders? In this video, I will be performing a market forecast on EUR/USD. So stay tuned. Now, this video is going to serve as my outlook for EUR/USD for the month of September 2024. The main purpose of this video is to show you guys how I go about establishing a directional bias and then how I identify potentially high probability areas to trade from based off of that directional bias. I use a multi-time frame approach, and in this video I'm going to be focusing on the weekly, daily and 4-hour time frames in order to ensure that this analysis remains relevant for the month of September. This is also the latest video in a little mini series of market forecast videos for EUR/USD to give you guys a real-time look at how I follow a currency pair. Now, before we kick things off here on the weekly time frame of EUR/USD, I want us to very quickly have a look at the DXY. And what you'll notice straight off the bat is that our weekly time frame here on the DXY is almost an inverted mirror image of our weekly analysis here on EUR/USD. And the reason this is because EUR/USD is inversely correlated to the DXY. What this means is that when we see bullish price action on the DXY, we typically have bearish price action on the EUR/USD. Now, it is not a candle by candle inverse correlation, but it definitely is something that can be used as an extra bit of confluence to add into your own EUR/USD analysis. So we're just very quickly going to look at the weekly of the DXY. And as we can see, our DXY is trading within this bullish weekly range. We have had our pullback into the EQ of our bullish weekly range that came in to mitigate this weekly demand zone. After that mitigation, we saw our internal structure shifting from a bearish market state to a bullish market state, and price is now currently trading within this most recent bullish internal range. Now, because of the fact that we are trading within this bullish weekly range on the DXY, the current overall objective is for price action to violate this weekly high, which sits at around 114,778. Obviously, before we get to that level, price will first need to come in and interact with this weekly supply. And before price can get to that weekly supply, we would need to see a violation of this weekly internal week high, which sits at the top of this bullish internal range. Now, at the time of recording this video, we have just seen a bullish weekly close in here as price action reacts to this weekly demand zone that forms part of a weekly demand chain that sits at the extreme of this weekly internal bullish range. And so now, based off of this reaction, we can anticipate that our DXY going into the month of September is going to look to potentially trade bullish from this area, initially targeting this week high, after that weekly supply, and then potentially after that our weekly week high. However, if we only see a short-term bullish reaction here and a rollover of price, a violation of this weekly strong low would mean that our internal structure has shifted bearish once again, and that would now open the door for a deeper weekly pullback phase, potentially down towards this weekly demand zone, which sits at the extreme of our current bullish weekly range. Now, I do want to stress that this is my outlook for the DXY purely from a technical point of view, and I am not taking into account any of the major news events that are scheduled to take place this coming month. And so now that we've established what we are anticipating to see here on the DXY, we can now hop back to our EUR/USD weekly time frame, and we can now see that price action is trading within this bearish weekly range. We had our weekly pullback phase come into the EQ and mitigate this weekly wick supply zone, which is also a daily supply zone. We had our internal structure shifting from a bullish market state to a bearish market state in here. And as we've been seeing for the whole of 2024 thus far, price action has been trading within this bearish internal weekly range. We recently saw price action trade above this weekly supply zone that formed part of this weekly supply chain, and shortly after closing above that area, we have now seen a bearish weekly close this past week. Now, this push above weekly supply facilitated a tap into a refined daily supply zone, which we're going to be looking at in a minute. But now we want to establish what we are anticipating to happen here next. The current objective is for price action to target the weekly internal week low. After that violation, our next sell target would be this weekly demand zone down here. The anticipation would be for this POI to generate just a short-term bullish reaction before a resumption of the underlying bearishness to target this weekly week low, which sits at around 0.95358. Now, if we are to see a violation of our current weekly internal strong high, that would open the door for a deeper weekly pullback all the way to this weekly supply zone, which sits at the extreme of our current bearish weekly range. And again, notice how our anticipated price movements here for the Euro USD are essentially the inverse of what we are anticipating to happen here on the DXY. So now from our weekly time frame, we can drop down to our daily time frame to have a look at that most recent bearish weekly internal range. And as we can see, that internal range is this bearish daily range in here. Now, I'm first going to be talking you guys through this analysis, and then afterwards I'll very quickly show you an alternative way in which you can map your daily structure swing points, which would result in a bullish daily range as opposed to this large bearish daily range. So as you can see, we had our daily bearish impulse, which generated our bearish daily break of structure. We had a really nice deep daily pullback phase. Our internal structure shifted from a bullish market state to a bearish market state in here, but then it very quickly switched back to a bullish market state again. And effectively what we now have is we are seeing a complex pullback taking place within this large bearish daily range. Price action has recently broken and closed above this daily supply, which we were looking at previously as a potential area which could facilitate the resumption of our daily bearish continuation phase. That break and close, however, allowed the mitigation of this daily supply, which sits at the extreme of our current bearish daily range. Now, this extreme daily supply zone is effectively the last area where our daily bearish continuation can originate from. The start of that bearish daily continuation phase will only truly be confirmed after our internal structure shifts bearish. And the point at which our internal structure will shift bearish at this current moment in time is after price action violates this daily internal strong low. Our most recent internal range is this bullish internal range. The mitigation of extreme daily supply has facilitated initially the internal pullback. However, it can also be the origin point of our internal structure shifting bearish should we see a violation of this internal strong low. Now, we will be looking at this bullish internal range in a little bit more detail when we drop down to our 4-hour time frame in just a minute. But for now, our current overall objective for this daily time frame is a violation of this daily week low all the way down here at 104,482. Obviously, before we get to that level, we would need to see interactions with this daily demand and this daily demand zone. However, because these are now considered as previously unmitigated POIs, if we are to see our internal structure shift bearish here, we would then just be anticipating potential short-term reactions from these previously unmitigated POIs before the underlying bearishness continues. Now, an alternative way to mark out our daily structure would be by using the FTC model, and that would be applied in here. We had our daily pullback and we had our internal structure shifting from bullish to bearish here. This obviously indicated that price action would now potentially look to target the daily week low. However, we can see on this occasion that price action failed to violate our daily week low and instead reversed with our internal structure shifting bullish once again. So because this was the anticipated new lower high, which failed to create a new lower low, once price action violated that anticipated new lower high, we can then mark that out as a new bullish daily breaker structure by applying our FTC model. We would then have this as a daily structure swing point. And then we would also have this as a new daily structural swing point, as this is essentially the starting point of the impulsive phase, which generated this breaker structure as we have now defined it based on the application of our FTC model. Now you'll notice that with this alternative approach to marking your daily structure, this daily supply zone is now considered a previously unmitigated POI, which we anticipate to only generate a short-term bearish reaction. Based off of this alternative approach to mapping your daily structure, you would still be waiting for your internal structure to shift bearish in order to signal the start of your daily pullback phase to allow you to now establish a new bullish daily range. Having done so, you would then still be looking for potential areas to trade from in order to target that new daily week high. So two different ways in which you can go about marking out this structure here. Either you just wait for your initial daily range to be violated before marking a new breaker structure, or by applying the FTC model here, you would then see your daily structure shifting from a bearish market state to a bullish market state. But ultimately, it all boils down to personal preference, because the first approach will lead to larger ranges, while the second approach, using the FTC model, will lead you to follow price action a lot closer, will lead to smaller ranges, but then will also lead to more frequent structural breaks. So now that we understand what's happening here on the daily time frame, now that we understand our overall objective and the main targets for price action based off of that overall objective, we can now drop down to the 4-hour time frame. Now, the 4-hour time frame is going to represent our daily internal structure. And as we can see, our most recent 4-hour break of structure is a bullish break of structure in here, which is this particular internal break of structure as viewed on the daily time frame. So our 4-hour is currently bullish. As you can see, we had our 4-hour internal trading bullish initially as it was facilitating this 4-hour impulse, and then we had our internal structure shifting bearish after this mitigation to facilitate the start of our 4-hour pullback. Now, because our 4-hour is currently bullish, we are anticipating a pullback into discount before a potential bullish resumption to target the 4-hour week high. Now, very quickly, even though that is our current objective for the 4-hour price action, we need to understand the context of this bullish 4-hour range. And if we drop back out to the daily time frame very quickly once again, we need to understand that we are currently coming off a mitigation of extreme daily supply. This daily supply zone is essentially the last area where our daily bearish continuation can originate from. And so even though the overall objective for 4-hour price action is a violation of this week high, we are currently anticipating our daily bearish continuation to take place. So specifically going into the first week of September, our short-term directional bias here on EUR/USD is bearish because we are currently trading this 4-hour pullback phase as price action comes off of daily supply. What we want to establish is which area is this 4-hour pullback likely to target before we potentially see the resumption of the bullish 4-hour trend if it were to occur. And what we want to do is we want to identify areas within this 4-hour impulse which generated this 4-hour bullish break of structure. And straight away, we have a 4-hour demand zone that sits in here. And just below that 4-hour demand zone, we have a 4-hour wick demand, which sits all the way at the extreme. The interesting thing about these two 4-hour demand zones is that they both sit within a much larger daily demand zone in here. So this area of demand is going to be our main preferred target for the 4-hour pullback phase, which is currently taking place. And what this does is it gives us a sell target for any counter trend sell trades that we potentially find during this 4-hour pullback phase, which is being facilitated by our 4-hour internal structure. Our 4-hour internal structure is obviously our 15-minute time frame. Now, you'll notice that I have indicated here that the first 4-hour demand is potentially acting as inducement. And the reason for this is because the 4-hour demand, which sits just below, crucially swept liquidity prior to it forming. Not only that, but this 4-hour demand zone also sits just above this trend line liquidity pool. And so in this area, if I were to take buys directly from a 4-hour POI, my preferred POI would be the 4-hour demand zone, which sits at the extreme. Trading from that is also going to afford us the opportunity to have a much better risk reward entry point when compared to trading the daily demand zone directly. Now, an alternative to trading these POIs directly would be to wait for price action to come into and mitigate this area. And after the mitigation, we would want to see our internal structure shift bullish first to potentially signal the start of our bullish continuation phase before we get involved. And the reason you would want to do this is because the daily context that we just spoke about. We are coming off of an extreme daily supply zone, which is effectively the last area where our bearish daily continuation can originate from. Because of that, there is a possibility that our 4-hour strong low is violated in order to facilitate that daily bearish continuation. Now, if we do see our 4-hour structure shift from a bullish market state to a bearish market state, then our next sell target would be this daily demand zone. Now, this is already regarded as a previously unmitigated daily demand. And so because of that, we would then be anticipating this daily demand to just generate a short-term reaction. And then based on price delivery coming into this previously unmitigated daily demand, this potentially short-term bullish reaction could facilitate the 4-hour pullback phase for a new bearish 4-hour range once our 4-hour structure shifts bearish. Now, I definitely feel like it's going to be a very interesting end, not only to Q3, but 2024 in general, because the price delivery that we're currently seeing is suggesting that there's going to be some really good opportunities coming our way between now and the end of the year. If you guys enjoyed this video, please do leave it a like, subscribe to the channel so you don't miss out on any future content. And as always, I appreciate you guys so much for watching, and I'll see you in the next one.